Mr. Dougan, the Q4 results 2013 are different from the analyst expectations. Why?
Well, on an operating basis, we exceeded the expectations. So at $1.3 billion and a 10% ROE, we were actually in excess of what was expected. We did take some litigation reserves in the fourth quarter, though, for some of our mortgage issues and for some of the cross-border issues, SEC-related issues on the cross-border side. So as a result, the net was a little bit lower, but the operating basis was actually a strong result.
You almost achieved your 4.5 billion cost target for 2015 by saving 3.1 billion. There is only 1.4 billion missing. Where are you going to save these costs?
Well, as you say, we've had a very strong performance on the cost side, and at 3.1 billion, we're basically in line with the targets that we've set. We do have additional progress that we'd like to make on efficiency and on costs. Those are distributed across the different parts of the business, but they certainly include some on our investment banking side, some in the private banking wealth management area, but also our shared services areas. So we do have some additional work to do, but we feel like we're in very good shape on that, and we feel like we'll be able to get the additional efficiencies out of the business over the course of the next 2 years.
A lot of restructuring work has been done in the past. Probably now it's time to grow again. Where do you see the best growth potential for Credit Suisse?
Well, we think 2014 should be a year of opportunity for us to grow. And as you say, we're particularly able to do that because we've done, I think, a good job on the capital side in terms of costs, in terms of really restructuring the business to be in a very good place in this new environment. We see opportunities really everywhere. Our private banking wealth management business here in Switzerland, really around the world, the ultra-high net worth segment, faster growing parts of the world. Also on the investment banking side, our equities and investment banking businesses should be very interesting this year in terms of growth opportunities. And again, much of that's in the emerging parts of the world where obviously there's been some disruption in the emerging markets so far, but we still believe in the long run those are going to be very interesting markets.
Regarding the instability in the markets and the issues around the emerging markets, how did the first quarter of the year start? Did you see an effect of these uncertainties on your business?
Well, the first quarter so far has started in a way that's pretty similar to previous years. The first quarter is usually strong, so we're seeing largely the same kinds of trends, but there are some impacts from the businesses, and certainly the emerging markets area has been one that's been a more challenging part of the world so far this year.
What is the status on the US tax issue? Do you think this will be solved this year?
Well, it's hard to predict. I mean, obviously, this is a long-running issue, and it's one we've been very focused on in terms of working towards a resolution. There are several aspects to it. Obviously, a lot of people focus on the DOJ element. In addition, today we've actually announced that we've taken some reserves against the SEC aspect of the cross-border issue, so that's more the securities and licensing issues. But we're obviously making progress towards a resolution there. So we'll see. I mean, obviously we continue to work towards a resolution, and our hope and our expectation is that we'll get there, but it's really hard to predict when that'll happen.
The last question is a political question. What would it mean for Credit Suisse if the SVP referendum against immigration would be accepted this week?
Well, I think in terms of the impact on talent, I mean, we obviously need to have highly talented people, and so having, being able to actually access those kinds of people here in Switzerland is important to us. I think the near-term effect would be not a huge effect on us, but over the long run, it certainly would have an impact. And I think most importantly, we obviously are concerned about the Swiss economy as a whole, and we do think that having the access to that talent is something that is very important. So, our belief is it is probably important for the economy.